But it's that last little 10%.
Yeah.
And I mean, if you're overpaying or if you're getting it wrong by 20% or something, you need a lot of growth, making sure that you're purchasing something that is going to perform in the strong markets, but also in the softer markets as well.
How long will this last? How long are these capital expenditures there? How long are these leases? These are all really good leading indicators.
Yeah. We've got properties there that were purchased sub 400K, renting to businesses that house workers, things like that. They're getting double-digit returns in terms of yields.
And we're seeing people do that. We're seeing people overpay a little bit at the moment just to get their hands on something.
Big areas, and I see it all the time. You know, they get lumped in with these small little satellite.
Australia's hottest property market, making up nearly half of our top 5 suburb list that we just went through on our recent episode. Ladies and gentlemen, we're in for a treat today. I have a local, on-the-ground buyer's agent, a friend of ours, and a client here today to talk through the main areas of this location in Northern Queensland. We're going to go through Gladstone, we're going to go through Mackay, we're going to go through Rockhampton, and we're going to go through Townsville specifically and get the on-the-ground intel, all of the real stuff that you want to know that the data does not tell you. We're going to go through it. I've got Matt Wilson here. Matt, how are you?
Good, thanks, mate. How are you?
Yeah, really good. I'm very, very excited to have you on. Our audience have been like really, really excited about the suburb deep dives we've done. Yep. And now getting someone who is there, lives there, breathes it, owns there, it's just really exciting to talk through.
No, you're very welcome. I'm very excited to be here.
Yeah. Do you want to just start by telling the audience a little bit about yourself?
Yeah, for sure. So, property investor, as you know. So, long-time friend, client, been around for a long time. Like to live and breathe this stuff. Closet nerd when it comes to all things property investing. We can talk about back in the day sending on research and suburb statistics and everything. So, love this stuff. Do it all day, every day.
Yeah, that's very exciting. I live that life too. I think our audience knows that about me. Property is what I do. It's just the thing I do before I go to bed. Real estate domain, just take a look at.
Yeah, and that's exactly right.
I've been spying a little bit in these areas. I feel like, everyone's buying here. And every time I go there, I just see under offer across these locations.
Yeah, it's been a wild few months, years.
Yeah.
Over the last,
How long do you think it's been?
Probably, it's been running pretty hard now for probably, 12 to 24 months.
Yes.
Yeah. So we were quite active buying in 2020, 2021. But since that, most definitely, it started to move significantly. Those sort of early days in 2022, 2023, you could spot those leading indicators really starting to take off. So,
yes.
Yeah, and it's been running pretty hard ever since.
Yeah. So for anyone listening to this episode, you might want to tune in to the previous episode where we go through the data metrics behind these locations, and it spits out all the numbers behind these specific locations: Gladstone, Townsville, Mackay, and Rockhampton. These are 4 of Australia's hottest property markets, and we've seen rampant growth. In Rockhampton, 41% growth in the last year in asking prices. Absolutely ridiculous.
Yeah.
So
coming off a very low base.
Yes.
That's probably one thing to point out for sure.
Yeah. 41% still pretty amazing. Low base or high base. Just
correct.
Yes. Yeah. It's like winning the lottery in such a short period of time. So let's start by going through where do you want to start? Let's pick a location.
Start in Townsville.
Let's start in Townsville.
It's the number one. Yeah, right? And it's the highest too. Yeah. So, in terms of the actual map. So, we can sort of run down if you want. I know a lot of people sort of get a bit confused going north of Brisbane. So, they sort of go, where is it? So, anyway, most definitely Townsville was the number one for us for a long time. It's
very true. I have worked that out myself in terms of the confusion as to these locations.
Grabbing Google Maps, looking at your phone, pulling it up.
A big shocker, mate. It's a 9-hour. So we're talking about a 9-hour corridor of North Sydney. 9 hours. That takes me all the way up.
Yeah, I think if you go a little bit north of Sydney, you are actually closer to Brisbane than Townsville is in comparison to Brisbane.
Exactly.
And Townsville's in the same state as Brisbane, obviously.
Yes, exactly.
Yeah, it's wild. Australia's a big country.
It is, especially this part of Australia. So let's talk through Townsville. For our audience, they would want to know specifics about the area that we can't find in the data. What makes up Townsville? Tell us a little bit about that.
I mean, everyone's sort of getting it right in terms of the actual location and the data metrics. We can all see it coming through. But yeah, when it comes to actually going into the locations, it's one of those places that, it's often called, say, the Twin City town. So it's almost got 2 CBDs when you're talking about Townsville. So, there's just little pockets in and around there that are really important to understand those little metrics. When you're investing in the area.
So let's deep dive into that a little bit.
Yeah, for sure.
I'm an investor.
Yeah.
I want to buy in Townsville.
Yeah.
As a starting point, I'm a Sydney sider.
Yeah.
I got no idea.
Yeah.
I didn't even know that it's a twin CBD. So I've done my data research. I've picked my area. Townsville's it.
Yeah.
What do I do next after going on Real Estate Domain? You start looking at these locations.
Yeah.
Can we go through a few of your top suburb picks in Townsville and why, and maybe some areas to stay away from, or things that I can't pick up on just data metrics?
For sure. So it's a family-friendly city, no matter what. It has the large relocation of Defence Force, junior interns for doctors, healthcare. A lot of people are relocating to the area for those kind of, I suppose, employment prospects. But they're coming with their families as well. So that's probably number one for mine, is making sure that, you're purchasing something that is going to perform in the strong markets, but also in the softer markets as well. Yes. And being family friendly is the number one when it comes to that. So, if you're talking about an actual asset that we purchase, most definitely freestanding properties.
Yep.
No one goes into units, stay away from townhouses, all these kind of places, because you get people that put a city-centric sort of viewpoint on the place, and they kind of overlay those fundamentals.
Yep.
People aren't going into units or townhouses up there, so freestanding properties is the way to go.
Okay, sure.
And in terms of suburbs, your Kerwins, your Mount Louises, Annandales, those are probably our picks.
Anything specific to watch out for when purchasing in Townsville for a Sydney sider? So
most
insurance
definitely,
premiums, for example?
most definitely flood risk.
Flood.
Yeah, that's probably your number one.
Sure.
Second is probably, there is some cyclone risk. So you are in there, but it's probably blown out of proportion a little bit in terms of the media and everything. So it's a bit like New South Wales. It cops fair amounts of storms and everything. I know cyclone is a bad word, and we can get some pretty significant weather events.
Yep.
But the properties themselves are quite well prepared up there. They're tied into the concrete slabs. They're being built to specs. They've got longer, bigger roof screws, all that kind of stuff that are actually, we're prepared for those kind of things up there. So,
yeah. And do you see this impacting value? So if something's flood zoned in my search of the property, do you see it a little bit cheaper as a result?
Most definitely. Yeah, we do. There's also understanding that there's different kind of levels of flood risk as well.
Yep.
So it's not a case of, don't buy in a flood zone,
but
it's also understanding that there might be certain areas that are flood impacted, but on a different kind of soil. There might be sand. So from a local perspective, you actually know where those risk areas are.
Yep.
And understanding that they might not necessarily be no-go zones, but you need to understand the numbers when it comes back to insurance premiums. That's certainly a big one.
Sure.
Yeah.
I think you touched on a really important point there, where you talked about different types of flood categories. So as a Sydney sider, this is crazy, but there's many pockets of Sydney that are flood zoned. So I lived in Maroubra recently, and we're looking at a property there fairly recently, and it's flood zoned. And I've been there, I'm like, what?
Yeah.
No flood is ever going to come here. It doesn't make any sense.
Yeah.
Sure, you might have the little paveway, have a little bit of water in a storm event, but the property itself will never have been flooded, and it hasn't been flooded in hundreds of years. So it's understanding this in a little bit more detail, looking at the property-specific nuances.
Yeah.
So if I was investing there, do you think I'd rule it out if it's flood zone, or is it a question of dig deeper?
It's where you would then carry on and do that more due diligence for sure.
I love this. So this is the sort of stuff that I feel like Sydney computer-based investors, which I think a lot of Northern Queensland investors are.
And I totally understand. It's a big risk up there for sure. It's something that we really, really look into.
Yep.
Yeah. It's our number one factor when it comes to actually looking at properties. Flooding is major, but these surveys and stuff are done by engineers, as you said, sitting in desktops, and it's the same. We had major floods in 2019. It was actually more about the water management, about how they release the water into the rivers and things like that, about how those places were flood impacted at the time, and then what risk mitigation they've done since that, the infrastructure works that they've done in the area too. So all those kind of things.
And one thing that we've picked up as well, our listeners will find this particularly interesting with valuations in Townsville. So we've seen some property investors and buyers agents as well, not to call anyone out here, but we've seen such a strong demand increase in these areas. And Townsville's the suburb the area where we've noticed that we've seen val shortfalls a few times. And for context, we've been in the business for 10 years, done thousands of loans. It's under 1%. It's under probably 0.1%. I can probably count the number of val shortfalls on two hands here, maybe between 10 and 20 maximum out of doing thousands of valuations. And more recently, we've seen a few val shortfalls in Townsville. So can we unpack this a little bit? Why do you think that is happening? And is it valuers just being too conservative, the market moving too quickly, or are people just overpaying?
Yeah, a little bit of both, if I'm going to be honest, because obviously you've got the three kind of players in a transaction. We always talk about the buyer, what they will pay, and the seller and what they will sell for, but you've got that financial sort of point as well in terms of what the banks will actually value it. And that's what we're being very, very cautious in this market. So obviously it's running hard. Offers need to be strong and it'd be out in front. But we also need to understand that from a financial point of view, where it's getting financed from, they're sometimes looking at 3-6 month old data, which by that stage is too late. So even just as an agency, we pre-screen everything as 3 months. Now we're using comparable sales. If it's beyond that 3 month mark, you're getting too old. The market's moved in that time. So, and yourself, once it's gone through that settlement period and it's finally settled, that transaction or that negotiation might have even happened 6 to 9 months ago. So yeah, definitely that's one thing we're being very careful about. We've never had anything bounce ourselves, but we need to be very careful when we're talking to our clients and when we're talking to the agents as well about why we might necessarily be offering in what we're offering and what that is actually, what that's accepted, because we need to make sure that it passes that finance point.
I think you just touched on something very specific there. So you mentioned that you haven't seen this. I feel like that may be part of the reason how local knowledge actually really helps. So if I compare this to, let's say I'm engaging a broad-based buyer's agent that buys anywhere and looking into this location, but they're buying dozens of properties here, it turns into a bit of a scale game. And it may make sense to overpay a little bit because of exactly what you just told me. Be like, in 3 months' time, you ain't overpaying, you're underpaying.
Yeah, that's right.
And we know this because the market's moving really quickly. We need to do this to get this deal done. It's either this or we don't get the deal.
Correct.
That's just the nature of it. So are you seeing, can you feel it in your conversations with agents that there is a lot of interstate buyers agents and interstate activity happening in Townsville?
Yeah, of course. Yeah, I mean, we're going into places where most properties are getting taken to market as an agent. Even we're still negotiating off-market properties and genuine off-market properties. But most of them are getting taken to the market. It's no secret. Like, why wouldn't you as a selling agent? You're taking it to market. It's getting sold. They're bringing it on within hours. You're talking 30, 40 written offers on places. So if you are securing something, there is that element of, I'm the highest buyer already. So, you do need to be out in front of it. But probably what I'm seeing there is, they're going into, suburbs and up north, it's less suburb specific and more street specific. It's always that way. I've always said that, Kerwin in Townsville, it's a massive suburb. You're talking different sides of different main roads, further west in Kerwin, the better. So, you're getting away from, lower SES areas and getting into more of the premium areas of that suburb. Certain streets you want to be away from no matter what. So
why is that?
Well, you can't necessarily just overlay and say, all right, well, this is the suburb to go into. You need to be in these particular pockets. So we often find even in those markets, and as I said, touched on before with the family-centric vibe, they actually value certain estates within those. So actually building estates. They're not gated communities or anything, but they're land releases and suburbs that are built up over time. They want to be in that estate necessarily, as opposed to that
Safety?
suburb. Mostly, and community.
Makes sense.
And most people, there's plenty of people who have grown up there, don't get me wrong, but there's many people who have relocated over time and they want to be close to schools, shops, these community aspects. They want those relationships when they come with their families into these areas.
It makes a little bit of sense.
Schooling is a big one,
So all those factors make sense. So you've said it's like a relocation area. So I've come from I spent a few years in Canberra, very much a relocation sort of place. There's a lot of Canberrans there, of course, but there's a lot of people that go there for work, stay there and build their life. And if I was going there with a family setting, I actually think that makes a lot of sense. I'd be like, hey, I've got a young family. I probably want the safety element of being in something that looks more estatey versus an older area that, I just don't know what I don't know, and I don't know the area, so I fly to safety a little bit.
That's right.
So that's really interesting.
Yeah, people flock to that community and that relationships for sure.
Exactly. So if we talk about the family-centric component in Townsville, so if I'm a buyer, I know that it's family-centric. Can you unpack what product, like what sort of house would I be looking at?
Sort of asset.
For a family. Is this just 3 or 4 bedrooms? So what am I looking for?
Yeah, minimum 3 bedroom. Minimum 3 bedroom. So we're always looking minimum 3 bedroom, preferably 4. If you see 5 bedroom homes, they're often being converted or something like that. Every parent owns 2 cars, or there's 2 car families. So it doesn't need to be near public transport or anything like that. Everyone drives, everyone's going to work in their car. It's not like a case of you driving through hundreds of sets of traffic lights to get there. So they're happy to be 5 minutes further away. So, off-street parking is massive, fenced yards, things like pets, larger backyards. It's outdoors. They value, outdoor areas, somewhere where they can get out in the open. We buy for owner-occupiers plenty of times. A pool's a big one for owner-occupiers. So, if you're thinking about that next sale or that next point, I know for the south that pools are no go, but often pools are a big one up there. Cool. So, everyone's looking at owning their camper vans, fishing boats. So drive-through access is a massive one for us. So we might get 2 products that are valued at the same and look as a complete comparable. But if I've got one that's got drive-through access, that's the one to go for.
Really?
Because
just for the boat?
Yeah. Boat, shed. Yeah.
Really?
Yeah.
So people in Townsville, do they get out into the water?
Yeah, outdoorsy. Most certainly.
Wow. Yeah. It's so different. Like Australia is such a big country.
Massive.
The people, where people live and how they live is very, very different. All these are like, it's completely opposite in Sydney. Like, we recently bought our family home in Sydney, and the things we're looking for is like how quickly in minutes, being like, no, that's 6 minutes. It's versus 8 minutes. It made a difference in terms of our preference in where to go. And this is walking distance.
Yes.
Just like, and that's how Sydney side is think. You've got to be near transport. You've got to be near the CBD. You've got to be near work. You've got to find a way to get there, and housing values are built around that.
That's right.
When you're looking,
that's right. It's not necessarily the case that you're flying in and going as close to the CBD as possible. That being said, though, I mean, you're staying away from those outer sort of suburbs, those new land releases, high supply, all those kind of things. But that sort of middle ring, around employment hubs is probably a major one for us.
Can I ask on that? So. The general advice is you stay away from these land estates. So a lot of people would say things like this because there's new supply kicking in and you can't control that, and it could extend out further and further. Typically, these areas have more land around it as well. You see that a lot in Western Melbourne, Western Sydney, areas wherever there's new land. It's typically not just one allocation. It's future potential allocations as well. So I'd assume the same exists in Townsville. Is that right? So can I say it's family friendly. Land estates are quite family friendly. Like generally, they're family homes. The market's running. It's running hard. Do you think for a young investor who cannot access straight away, do you think there's potential scope to purchase into one of these land estates, maybe there's a land contract. Does that exist in Townsville?
It does. It does, but I would still steer away from it.
Yeah,
my personal preference. It probably then goes off your budget. There's probably a certain sweet spot that we buy for our investors where if you're getting to that lower end, you're tapping out of that market and moving on to others. In my opinion.
Interesting. Yeah. Can I get into that? That's a very, very good point. So what's Townsville's min budget? What would you say?
I would say if you're looking sub 500K now, you're starting to really, really not scrape the bottom of the barrel, but you might be compromising on certain aspects.
Okay,
for sure.
So 500,000, and I'm sure we'll get to it. So we'll ask that question for each location. Yeah. But is there any way if I have $400,000, can I buy in any of these locations?
Yeah.
Okay, perfect. Good to know that there's somewhere I can buy.
Yeah.
Okay, so let's pivot into the second location. I think going down.
Yep.
Is this Mackay?
Yeah, okay. Correct.
Yes.
Mackay.
God.
There's an argument about this. Don't worry.
Oh, really?
I argue with old people about this all the time up
really?
there. So basically, it is. I call it Mackay. Some people mispronounce it and call it Mackay. But if you speak to people who have been there for decades, they actually say it was originally Mackay.
Really?
Yes.
Okay, cool. I'm going to go with that. I'm going to write it originally.
Yes.
This is really funny because Matt and I were talking just off pod a minute ago where about pronunciations of suburbs. And I'm talking about suburbs all across Australia in many locations that I haven't bought, seen, or been to. And Kurt and I have spoken about that. And sometimes we get our suburb pronunciations incorrect. So if you are listening to this, offended by that, big apology. It is not intentional. It is us just trying to uncover areas of Sydney and trying to do it.
Don't need to pronounce it right. Don't need to pronounce it right.
Pronunciation.
Value, do you?
Yeah, that's right. That's right. We're numbers and helping you work out where to invest, not the pronunciation of things. So Mackay.
Let's go with that.
Let's go with Mackay.
Yes.
The area you live in as well.
Yes.
Tell us about this. This one you would know so well.
Yeah.
This is your day-to-day.
Yeah, day-to-day. I know them all pretty well, but definitely know this quite well.
Yeah, of course.
For sure. So very, very strong market as well.
Yep.
Different when it comes to it. Probably suits more of our active investors.
Yes.
Probably less set and forget. But in saying that, it's probably, because you're talking much higher yields, maybe a little bit more transient market in terms of the movements of people. So all these things need to take into consideration. And obviously half the population as well. So little things.
You said transient.
Yeah, correct.
Why is
obviously with the mining industry, it moves people in and out with the cycles.
Yes.
But it will be less boom and bust in the future than has been in the past. People are prepared for those kind of markets. It's certainly grown up. We've seen those markets, dive in during the mining downturns. Yep. But they've significantly grown up since those times.
Sure.
So I see a lot of people sort of still talk about those times, and I totally understand that, and I appreciate that as an investor. But these markets have diversified since that time too. Yep. So they most certainly are still underpinned by mining, but there's still healthcare, government agencies, huge regional hospitals, education.
So if we're looking at the difference between Townsville and Mackay, Townsville less mining dominated, is that what you're saying?
Yeah, it's and also their commodities are a bit more diverse in Townsville as well. So Townsville's still got mining, but copper, zinc, gold, all different things. Yep. Whereas Mackay is probably more reliant on the coal industry.
Okay.
But probably something to keep in mind is you often see people talk about energy coal, and it's more steel making coal. So it's probably more pinned to the sort of steel industry, if anything.
Interesting. And this makes up a large chunk of employment.
Correct.
There.
Yeah. Okay. And the flow on of that as well. But
of course,
high incomes and strong incomes as well.
So as part of our deep dive, what we picked up was the backbone behind the story of Northern Queensland is actually an employment story. Mm-hmm. You're talking about unemployment rates that have been double digits in some of these locations. And now down in Townsville, went from double digits to 2.2%, leading Australia. Yeah, there's no unemployment there.
I was tracking it all the time.
Yeah, this is the story.
Yeah, brilliant.
So what do you think has driven, do you have any insight as to what may have driven the change in the employment story in these locations? Is it just cyclical, or is it Australia-wide a little bit?
A little bit, but I mean, it's also, they're diversifying as well. You talk about Townsville there, the federal money that's going into that area is unbelievable. Wow. So, you're seeing the knock-on effects of those, the infrastructure projects and stuff, that people are coming. But then you think about that from a movement point of view as well. When these people relocate to these areas, if they've got things that are servicing well, like there's quality schooling up there now, something that probably wasn't there before, and it's making people stay. I get many clients that have come to me who have sort of said, we're relocating for 2 years. 2 years later, they're buying their family home. Yeah. And they're staying there for the next 10.
Is that a little bit about
it's fantastic. Yeah.
That's awesome.
Yeah.
So livability, really high?
Yeah.
Is that the same in Mackay?
Yeah. And you think about now we've got that kind of that work from home environment, all those kind of things that are helping as well. Even in the mining industry now, like they're working out that we have drive in, drive out workers who are going out to the mines and coming back. But they're actually, they'll go out to camp accommodation and come back to a really livable, a fairly significant location with people and in terms of size and accessibility. Yep. But they also, the mining, the companies are actually maybe allowing them to work from home for a couple of days. So that's more high salaries, low affordability, good affordability in terms of housing, good schooling for their kids. It's a great place to then raise a family and actually get through that period as well.
Sure, so, that sounds amazing. That sounds like a great combination of high disposable income. Yeah. Sydney-siders, listen into this. You want a good life? A lot of Sydney families live out shouldn't say it. Someone in my family lives out 50, 60 kilometers, wants to live in a family home. Yeah. This is where she can afford. Yeah. It makes it a bit awkward. This is where she can afford a family home. So she lives there. Mm. This is the story of so many Sydney-siders.
Melbourne too.
Correct. And then you get on a train, you wake up at 6 a.m. in the morning, you get on the train at 6:30, you get to work at 7:30. Like, children haven't even woken up. That's right. And then you got to find a way to get them to school. And then you come back at 7 o'clock. Like, livability is pretty poor, and you're using all of your money to pay the mortgage. Yeah, correct. 50% of your income, and you have barely any left over to go out for dinner.
Correct.
This is good Mackay. And like
strong incomes, mortgage at $500,000 or something like that.
This is great.
Yeah, pick the kids up in the afternoon, things like that.
It's pretty good. Yeah, that sounds like an amazing lifestyle.
Yeah.
How far away are the mines? You said they drive.
They're sort of within probably that 2 to 3 hour bracket,
Close.
I suppose. Yep. So some people bus it in, some people drive in, drive out.
Okay.
But they're often doing maybe a 1 week on, 1 week off kind of shift. Other people are working Monday to Friday, coming home in that period, maybe doing the Friday from home.
Yep.
Where, some people are doing longer weekends at home. And,
of course.
Yeah, and with the technology in the mines as well, those kind of things have really, really helped over the years. So, and it's not just the mines. There's so many different industries there as well. I mean, agriculture is massive. The sugar mill, it was known as the Sugar City. So
Sugar City?
Yeah, correct.
Really?
So, yeah, they've been around for 130 years.
Australia exports sugar, I assume then?
And sort of around Australia as well. So,
yeah. What about beef?
Is that beef, true? And it's Rockhampton.
So is that Rockhampton? Is that where I'm going next? Okay, sure. Yeah, let's do it.
Beef capital of the world.
I was actually trying to work out where it is because, funny story, almost everywhere we've been overseas, you can see on the menu, Australian steak. And just like, wow, it costs a lot of money. You want to buy Australian steak overseas, you're paying a lot of money. You can buy it $20-$30 at the pub here. Over there, it's like at a zero. So let's pivot into Rockhampton.
Yeah, for sure.
This is probably the number one area where I am having conversations with people where it was Townsville.
Yeah.
And now Rockhampton seems to be the area where if I'm talking to somebody, they mention Rockhampton to me. So it's something that's popping up on our radar.
And it's probably had that ripple effect down from Townsville too. So, I mean, Townsville's quite a major centre, and it's starting to ripple down the coast a little bit for sure. So, certainly from an affordability point of view, still getting the yields and the strong points and still sort of entering in that, maybe that sub 500K mark if you price well.
What about
if
Mackay?
You purchase well. Mackay coming in is a little bit of a premium, probably purely for the incomes, but the yields are so much higher. We're getting sort of that circa 7% yields on purchases in Mackay, even with the premium that you're seeing in the purchase prices. So
You're getting 7% yields?
Yeah, correct.
Wow. And what's Townsville yields like?
Probably a little bit less. Yeah, it's circa probably low fives. at the moment.
Wow, that's very different. Yeah.
Most of our purchases are sitting around there.
7% yields on offer, Mackay. That's pretty
and that's
amazing.
why it probably suits more of our active investors.
Yeah. What do you mean by active?
Probably someone who's maybe a little bit more keen to maybe do maybe a cosmetic renovation or something that maybe they could land bank or do a conversion, like a high set conversion. If we're finding things that are maybe legal height downstairs, we can do a room conversion.
Sure. Is it room conversion? Can you get a second income?
Yes. Yeah, you
can. You get a second income as well?
We've got properties there that were purchased sub 400K, renting to businesses that house workers, things like that. They're getting double-digit returns in terms of yields. Yeah, pretty wild stuff.
That's amazing.
Yeah. And you're talking these businesses are still looking for workers. Employment's strong.
Yep.
There's no sort of I track these things really, really closely and talking to businesses as well because I like to get out in front of that. Still looking for workers. Still can't find people to do the simple jobs, come to town. So there's that strong employment. There's all capital works. You're talking 5-10 year projects, strong projects for a long time. So, we're seeing people sign up 2-3 year leases as well. So long-term stability, which is really, really, really great.
This is a dream for a property investor. 7% yields, 2 to 3 year leases, businesses on fire in the area. This is great.
Yeah. I mean, there's a reason why these places are doing what they're doing.
Yes.
It's backed up by actual on the ground stuff.
100%. So data doesn't change just by investors going into an area at random, right? It's generally led by owner-occupiers to begin with or led by an economic change. That's what we talk about a lot in this pod, that there's an economic change or a job improvement, some form of change that triggers this wave, and then it's like a transmission that happens and we're at the point where it's like, okay, is this sustained? And when you're talking to businesses on the ground, you get a real clear understanding as to how long will this last? How long are these capital expenditures there? How long are these leases? These are all really good leading indicators.
And I mean, going to opens and speaking to people there, seeing who's actually buying. They're owner-occupiers.
Yes.
It was an owner-occupier-led boom.
Yes.
You'll go there, it'll be a 20 written offer. 16 will be owner-occupiers, which is a fantastic thing. But it also, it's a little bit sad sometimes when you go and you see these families that are getting bumped out by interstate investors. But it is what it is. That's the market, and that's what we're having those conversations with people about.
One thing, I'm going to add a little bit of gold to what you've just said, the data gold behind this. So we have tracked housing finance data state by state, every location, and we've done a job deep dive on every single state. Queensland, dominated by Northern Queensland, which you can break down specifically into these locations, is on fire. It is the best in the country. And you can see this. So you have owner-occupier-led finance growth at 30% in Queensland since January 2023, pretty much the highest in the country. And that's a big increase in owner-occupiers seeing finance inside 18 months. Investor finance up 69% as well. So a big increase, but a ratio of 2.34. Compare it to South Australia, for example, which we've been looking at being like, this is getting a little bit concerning. It's just investors. There's no owner-occupier growth happening. In fact, that's sort of tapered off completely. It's just investors coming in. That, to me, is a little bit of a signal of a late market cycle where it's just like, what happens late into a boom? Investors are just jumping in, being like, everyone else is buying, that's why I'm buying, right? But like Queensland, the data is here. Owner-occupiers are here, and the story
they're
is
the marginal buyer too. Like they're the ones who they see those little things that they need in a home, and they're happy to pay for it because it gets them into that place where they can have that backyard for their family. They can have that fishing boat in the backyard. So I mean that's where it's led from. So it's healthy for us to see as well, because we know that we're going into markets where we're saying, well, this isn't investor-led, this is owner-occupied driven. And we always say that we really want to make sure that our purchases are quite defensive in softer markets too. That's why we purchase what we do, because we know it won't be like this for forever. But we want to make sure that they're really defensive in those softer times too. So,
that's so clever. I love the wording you're using. It's music to my ears. Defensive assets. So if you're a property investor and you want to buy in what I call a little bit of a higher risk market. I say that because it has demonstrated previous volatility.
Correct.
The nature of industries, even what you're talking about, is different to, say, a Sydney or Melbourne. That may create volatility in rental income. It may create volatility in house price changes over a 20-year period. There could be periods where down and up go a bit higher.
Most definitely.
one of the best ways to manage this is going defensive. Like there's always going to be families there. There's always going to be owner-occupier that want to live there, generational people that won't move.
Yeah, correct.
You buy the sort of stock that they want, you now have some protection to this because it's not just an investor who wants this. It's everyone.
Yeah. So we've been in these markets when it's been soft, and we know the houses that still perform. We know those properties that still do well in that times. Are you getting 40% growth? No, you're not. But we know that it's still, you've still got that demand from the local buyer.
Yeah. That's so important.
That's really important. Yeah.
What about if I circle back? If I'm an investor and buying this, the importance of this actually is, let's just say I'm getting a $700 week rental income.
Yeah.
I want confidence that if things change a little bit, I can still ensure that, hey, in a vacancy environment of say 5%, which is nowhere near, like these areas have no vacancies essentially.
And not anytime soon, but definitely we plan for times like that.
Exactly. You want to be one of the homes that being like, if this property goes onto the market, this is the one that someone will want.
Yeah,
so
correct.
That knowledge is really insightful. I am learning so much about these areas as we're talking. This is far more detailed and far more there's so much more understanding about areas than the one that Kurt and I had, because none of us, we've never been to any of these areas. Like, what is going on here?
That's what I'm seeing at the moment. Everyone gets that sort of 80, 90% right, but it's that last little 10%. Yeah. And I mean, if you're overpaying or if you're getting it wrong by 20% or something, you need a lot of growth for that to break even.
Yes.
And you're going to get tapped out.
And we're seeing people do that. We're seeing people overpay a little bit at the moment just to get their hands on something. You're like, and I'm going to go further and say they don't know that they're overpaying. Like, I don't really know. They don't have the advice there. They think they're getting it right. They're doing comparative market analysis.
Yeah, most definitely.
With other properties. But if you don't know the area specifically, you don't know the streets area, there's a reason why this is going cheap. And, you can feel like you've got a good deal, but like the locals are looking at you being like, what idiot paid that money?
Yeah, that's exactly right. Yeah, there's a fair bit of that going on for sure.
Really?
Yeah.
But
that's okay.
I love that. Okay, our final location, I think we're going a few more hours south.
Yeah, not as far south of Rockhampton, but a little bit south.
A little bit further south of Rockhampton.
On the way down.
I'm going to talk through population. So this is the smallest of the populations.
Correct.
Gladstone.
Correct. Yeah.
Gladstone. Gladstone's got a funny name. Those that have been in the property investing game for a while will be a bit fearful of Gladstone.
People will have varying sort of opinions on Gladstone depending on when they purchased.
Yes.
Yeah. I mean, you'll get someone who purchased in Gladstone for your 3s or your 2s or something that'll have a lot different opinion of someone who might have purchased, way, way higher than that.
Yeah,
so, yeah. It varies a lot.
The roller coaster. Yeah. So that variability, what do you think of Gladstone? In light of us.
Yeah, I mean, it's a industrial area, no doubt about it. But it's a jobs market area. Like it's almost the beating heart of Queensland. It's where your power generation comes from. So it's people are going there for employment, most definitely.
Yep.
Yeah, we don't shy away from that. We understand that it's more of a market timing cycle with Gladstone for sure.
Okay, sure.
So it most certainly suits our more riskier buyer. But it's the same kind of place that's growing up in comparison to what it was 10 years ago. So they're starting to get that community vibe as well. So maybe you might even overlay it and say that it was, a bit like what Rockhampton and Mackay were 10 years ago or something, if you wanted to probably look at it a bit like that. So, but yields are higher, employment's strong.
Yep.
It's quite diverse as well.
Really?
Yeah, it's quite diverse.
Okay.
So,
I thought it would be a mining.
But I mean, you're talking LNG, you're talking alumina, aluminium refineries, power generation. Yeah, and then it's also tied in with the agriculture and the mining area, sort of in the region.
Sure.
And then it's got a really, really strong export port as well that they do a lot of work through. Yeah, and I mean, there's plenty of sort of in and around that the tourism industry as well. Some great islands, some great fishing, and some pretty cool.
That sounds like fun. And if I, from a livability perspective, we talked about some of these other areas, Gladstone.
I wouldn't put it as high as the others, purely probably from a economies of scale kind of point of view.
Yep.
I mean, you're talking the difference between a sub 50K sort of population to a place of 100, 200,000.
Yes.
It's going to vary in terms of sporting and schooling and things like that.
Yep.
We don't shy away from that. But it suits that those families or those people that might relocate to that area that, want those strong incomes still, but really want that affordability and are happy with something that, that they're happy with a simple home that they want to purchase for. And as a property investor, we can leverage into that knowledge and that kind of get on the back of that as well.
For sure. And what sort of yield am I able to get?
Yeah, you're probably talking still that sort of circa 6% growth.
6%?
Yeah, gross, sorry. Yeah.
Okay, sure. That's pretty good.
Yeah, I'd probably say north of 6% if purchased right. Yeah.
North of 6% if purchased right.
So it's probably suiting our investors that are quite active, maybe got already some exposure up north. So in those other bigger markets that, maybe a little bit budget limited, but that's okay, but still want something that's really, really strong cash flow wise, probably pretty much getting it right in terms of market cycle. We're seeing massive interest in those areas, but we need to be careful because smaller markets, you can move that needle quite well, or smaller sort of investor interest can move that
for sure.
Yeah, and I mean all of these markets, they're you probably have the data, but they're 10 years lowest listings. Like the listings are so low. Yes. So yeah, we need to be very, very careful, and we watch that very, very closely as well. We watch that and make sure that when that supply comes back on, what are we doing in those situations? But yeah, certainly Gladstone, it suits the investor that maybe has some exposure up north and happy to go into this.
I like that.
Yeah.
Price point?
Probably 450 to 600K. That's probably our sweet spot.
Sure.
Yeah, but I mean, you're talking freestanding homes still.
Really?
We've never bought anything sub 500 square meters. Yeah, never bought 2 bedrooms, anything like that.
There's so much value here.
You're talking brick veneer homes, solid brick homes. Even they might have a shed or an outdoor entertaining area, and big driving to employment hubs, schools.
Do you see much construction just in your day to day?
It takes so much because people need to understand. Yes, there is vacant land there, but the labour's hard to find. Yep. It's expensive. Yep. Material costs are 30% higher up there if you ever want to renovate or anything like that. So we need to take that into consideration for our clients, most certainly, if they're doing any kind of things. But in terms of the actual build then, the supply, it takes a lot for a big developer to come in and smash these places with large volumes. So it's really got to make sense. So, we were buying places that were below replacement value for a long time.
Yeah, it sounds like that, especially with replacement costs going up so much.
It's reset that sort of base point where we're at.
Yeah. Wow, this is you're selling I'm listening to this. I'm like, oh wow, let's incorporate this into. We've been doing a series how we would invest and where are we going and how are we building a portfolio. Across Australia, and some of that is looking at safe markets to begin with for certain types of investors. Just
sort of cornerstone properties in there.
Exactly, right? You kind of want to build confidence through your journey. So if you were building a property portfolio and you're okay looking at Northern Queensland as the heartbeat of this portfolio, how would you construct it between these areas?
Yeah, so I'm starting with a cornerstone property in Townsville for sure. So you're probably talking that 6 to 650K mark is a sweet spot for us. That's getting you out of maybe those markets that are a little bit marginal, or those suburbs that are a little bit marginal, or in terms of performance over time. But that is getting you into a fairly quality area. You're seeing a return of 5% growth on that.
Pretty good.
Good yields, gone strong. But you're talking a 4-bedroom, 2-bathroom, 2-car garage, brick veneer home, on minimum 600 square meters for that in an estate that's close to schools and shops and everything. So,
sounds great.
Yeah. So that's probably my cornerstone property for sure. We have a lot of clients like that have come back to us, repeat clients that have then gone, right, I want some more exposure, but they're happy with their exposure in Townsville. So they will look at a market like Mackay, and they might look at something that we are going to target a higher yield for them. So we might target a 7% yield or something. So, I'm looking at various suburbs in Mackay, maybe your East Mackays or your West Mackays, your Glenellas, places that are sort of more premium, close to your hospital, your major regional hospital there. It's having a $250 million upgrade. They're adding 130 beds, things like that. Like they're big time. And for those markets, and we're probably going into areas where you want something that has high land content and a larger block. So we're buying a lot of the land sizes there are 8 or 9 square meters. So they all got sort of subdivided at the same time. Yeah.
Seen that number before in Queensland, actually.
Yeah,
8-10, I think.
And so there's certain pockets in that maybe a zone high rise or medium density, something that we can land bank for the future that still grasps that 7% yields. It makes it quite easy to hold.
For sure.
And yeah, we're probably purchasing around that sort of 550, 600K mark.
Yep.
And that's
stepping
probably
it down a little bit.
Yeah, probably nail on. And but something like that might rent for 800 a week.
Yeah.
And it's quite strong. And
I told you my Sydney properties, they're I got a $2 million property here as an investment. It doesn't even rent for $800 a week. Yeah. Like the yields are shocking here sometimes. The land sort of stuff here.
Yeah, that's right.
So good.
Yeah, and that's why it's such a it's a great market for someone like that who might have those sort of cornerstone, but maybe struggling from a cash flow point of view, but still want exposure to keep moving forward or park their money. So,
for sure.
Yeah. So then we're probably pivoting into either Rockhampton or Gladstone, but I'm probably taking people towards Gladstone by that stage. They might be comfortable with their exposure.
Yep.
They're happy to take on a little bit more risk. We're trying to get that market timing a little bit better.
Yep.
And yeah, we'll be entering in those markets around that sort of 450, 500K mark.
Sure. So you think the market timing, you just touched on a point here, the market timing, Gladstone market timing is still okay?
Yeah. Yeah, it's getting quite close. Yeah, it's really good at the moment, in my opinion.
That's really good to know.
You can't really see the supply flooding in from now. So it's really a case of, we're looking for clients who might want that really short-term growth to be able to leverage into something else.
Yeah.
Dealing with a lot of younger investors that, might have some good exposure of those cornerstone properties. But you always say about, sort of managing your capital and being able to deploy it in areas that we need to be able to get that initial growth so that we can get that out and go again.
Yeah.
Yeah, that's where we're probably going.
For sure.
Yeah.
And this is a great portfolio you've built here. I like this.
Yeah. And then we'll probably pivot back to maybe your Rockhamptons and same kind of deal there. We'll purchase around that 500K mark and try and get that 6% yield and something with really good land content.
Wow. Cool. That was very, very
dive around.
Yeah.
Build a decent portfolio for someone up there.
You know what I'm taking out listening to this is there's an element of what is the right amount of growth? What is the right fair value of an asset in these locations? So I'm not talking so much location specific, but some of the things that you've actually told me here have really enlightened me with maybe fair value in some of these locations is actually significantly higher than where anyone is thinking, and we can comprehend because of how the Australian economy is changing.
Yes.
This area being a little bit of a heartbeat and a gateway to the world for one of Australia's areas of growth as the world changes. We're talking about energy here. We're talking about a country that wants to be an energy leader and has exports to the world here. So it's very hard to work out how big this economic change is, how sustainable it is, how far it can be. Yeah. But there's arguments to be made here. You're talking $500,000, just on a relative game. That is a very, very small, even on affordability, incomes are so much higher
be able to afford. And we've seen that price point, reset a little bit with inflation, obviously.
Exactly, yeah.
And I think how much it's interesting to talk about whether, is it actually, proper growth, but we've also seen that inflation embed in that.
Yes.
And so it's sort of, I guess people are talking about, it maybe ran a little bit too far. Well, a lot of that was probably reset in terms of what inflation was, even that construction cost we'd spoke about before.
Exactly.
And we've reset that price point. But, you can't ignore the fact that it's still led by owner-occupiers. You're still seeing that jobs growth, all those kind of things. It's not sort of flashing red for me.
Exactly. So you've got employment growth, the highest in the country, amongst the highest in the country. You have an economy doing really, really well. You've got affordability being particularly good relative to the rest of the country at the very least. Even with high interest rates, you've probably got an interest rate tailwind that may kick in at some point over the next few years. You have a lot going for it. And then you've got a really strong economy there. I see the reason why an investor would really look to put a magnifying glass on these areas. And I really like how you summed it up for that investor.
Small areas. They're not small areas. They're big areas. And I see it all the time. They get lumped in with these small little satellite Blackwater and all these really small little mining towns, and they say, Townsville and Mackay and Rockies they're large areas, and there's large incomes, and there's loads of people that want to be there. I understand it's not everyone wants to be there, but there's a lot of people that do and will pay for the privilege for it.
Yeah, of course. Yeah. And before we wrap up, can I get your thoughts, summing this all up? What do you think some mistakes someone who wants to invest in this area, what mistakes are you seeing being common for an investor that is trying to buy there?
Yeah, so definitely overpaying. It's hard to get around that. You're getting caught up in the Fomo, and we spoke on valuations and stuff before.
Yes.
Being patient is number one there. Just take a breath. Understand that, locally people are looking at prices, they are looking at listings. It will cycle through your seasons, and so be patient in terms of that. Watch your listings numbers as well. So it's a bit of a musical chairs game at the moment. So people are flying around and doing that. But yeah, overlaying that sort of city-centric mentality. So we spoke about that before, trying to be as close as the CBD as possible. That's not necessarily something that we need to look at.
Yep.
There's not necessarily inner middle and outer rings and things like that. You don't need to, we're not looking at public transport lines or things that you need to be on a train line. Often you don't want to be on a train line or anywhere near it in these points of view.
Yes.
There's an element to people want lower maintenance properties. So you with the sort of kind of work and employment that people have, people want something that they can come back, reside into, and be okay with, and not have to necessarily perform so many maintenance issues and stuff over time. But yeah, we spoke about it before. But understanding that two properties might be like for like, but there's that family element is a massive one for the local buyer. So that's the marginal buyer. So they want things like your drive-throughs, accesses, or your second bathrooms and stuff. It's massive for a local family. There's a few other things, but they're probably the main ones. What I'm seeing.
Covered a lot of ground here, Matt.
Yeah,
and we are deep dived into the hottest area of Australia, and I can see why. Like every metric that I look at, really high level, spits out look in these areas. And hearing it from you, I think our audience have just got so much information here about some of these areas, where to look, how to construct a portfolio. That was particularly valuable as well, and what areas exhibit different risk profiles, and the market timing element as well associated with some of these different areas. So I have learned so much from you, Matt. Can I ask, I think our audience will ask, how can they reach you if they want to speak to you specifically?
For sure. So you can reach me at www.iourproperty.com.au.
Yes.
More than welcome to reach out. I chat to people all the time. Yes. I'm not somebody who keeps all my secrets or anything like that. I'm happy to talk property all day. And send me an email, matt@iourproperty.com.au.
Yeah.
I'm sure I'll end up chatting to plenty of people who want to get up there and want a piece of it. But I'm happy to talk through it and make sure that people don't make the same mistakes that I see other people making.
Yeah, for sure. So that was Matt at IOU Property. I'll put it in the show notes below. You get the full address there and the full contact details, and you can reach out to Matt for that local insight about these areas, the hottest location in Australia, where every property investor that we speak to is looking at, has thought about, or has an opinion on. And I feel like everyone listening here has just got a little bit of a treat and learned something about this area today. For those that are watching, we are talking to area specialists now in areas that you want to understand. So if you want us to look at a specific location, then put that location in the comments below, and we'll use our network to try and find someone who is there on the ground that can give us the intel about the area and what the data isn't actually saying, like Matt has done so generously today. And for those that are listening on YouTube, if you don't mind just hitting that subscribe button or that like notification, that would really help us and support us on our journey to grow this channel.